The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 8th, fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life was going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let your fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, and I will be glad to get to it. Of course, inside the Tigers Den, well, just about any ping will do. So let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 82 points, 24,293 is the print. S&P's up 13. NASDAQ 100 up 0.7% or 42 points. Russell's up 7 points. Semis are flat. You've got gold back $4. Silver is flat. Volatility index down 5% or 54 cents. Leading the charge to the upside, it is the Sage one. Sage Therapeutics up $11 or 7%. AutoZone in the zone up $9, 1 3/10%. Alexion Pharmaceuticals up 777 percentage-wise. I think that's going to ring the cash register as it's trading out at 115.08. That's up $8 and change. Priceline is up $8. To the downside, it is Bitcoin Investment Trust off 132. You and I took a look at the similarities between this vehicle itself and gold back in the 1980s, when in 53 days, in the case of gold, it doubled in price. In the case of Bitcoin Investment Trust, it had made a top. We said, don't jump on board that vehicle just yet as it pulls back. It has been doing so, certainly today. You've got Cooper Companies, that's up 15 or down $15 or 6%. Johnson Outdoor down $10 or 13%. Fizz, oh, what a relief it is. Apparently not today because it's trading down $8.75. That's FIZZ, National Beverage Corp. That's off about $10. Of course, I want to look at what you want to look at, and that means we go to our first requester, that first requester being King Arthur and his knights. You and I, we are his knights, and he wants to take a look at two equities out here. One is Freeport-McMoRan. In both cases, what Art is looking for is bottoms. Now, the interesting thing about Freeport-McMoRan, and I'll pull up this chart here first. The top of this chart is the actual chart for Freeport-McMoRan, trading at 1490. And if we just look at this chart just on its own merits, one of the things I imagine that Art is looking at is this wide-ranging bar and gap up. We don't have volume. We don't really need volume here. You can see the sign of strength. If it doesn't stick out at you, let me help it stick out at you. We're just going to put, I think it's yellow line. Yeah, just a yellow line across the screen. So gaps are our friends. NMW, no matter what. No matter whether it's to the upside or to the downside, because for you and I, they identify, that comes from my cousin Vinny, identify levels of support or resistance. Well, in the case of Freeport-McMoRan, a wide-ranging bar, accelerated volume, all those things, this is a couple weeks ago, price came right back there and tested. That's not the reason I'm showing you this chart, but on this chart here, it's so visible and it makes the point so well that I just simply wanted to go ahead and point it out. Now, if we take a look at what I really wanted to share with you, Art, on this chart and everybody else, is that Freeport-McMoRan, when you trade that, it is as if you are trading the currency pair, the Australian dollar versus the U.S. dollar out here. That is the bottom panel of my screen. So basically, you're going to see red bars that are basically above zero or below zero. When it's above zero, it's telling you it has a positive correlation. When it's below zero, it's telling you there is no, it's the opposite correlation. So we can see that the majority of the time, there is a positive correlation inside of Freeport-McMoRan. Why is that important? Well, if there's a positive correlation, if the two, in essence, kind of trade off of each other, it's really important for us in evaluating Freeport-McMoRan to take a look at what's going on inside the Australian dollar. So if we do that first, I'm going to go ahead and bring this chart up on the screen. Now, we're going to take a look at the futures contract. In this case here, it's basically the same thing. So if Freeport-McMoRan is actually forming a bottom, what we can see here in the Australian dollar, hi, sweetie. Oh, you're welcome. And we can, that's okay, that's cool. If we take a look at it, you've got the A to B equals CD pattern that price is targeting as we speak right now. Now, just because this is a one-to-one level out here, that doesn't mean that this is going to go along the Australian dollar, or this is where it's going to form a bottom. This is the equivalent of trying to form a Gartley buy pattern. And in the case of Art's call or looking at FCX, he really wants to see this form some type of buy pattern out here. It's not in place. The black dots on here, this is a little bit different set of tools than what you're used to looking at. Usually Stevie's red line is something we take a look at. On this chart here, it's converted to black dots out there. The other two lines are something that I've been tinkering with. Another cool Stevie tool out here, and you'll see that when those red dashes and that solid line are synced with each other, it gives you a great directional move, which is also very helpful in staying inside a trade that you're in. If I were going to take a look at, maybe my biggest weakness out there, because it's always about turning your weak links into something, you're only as good as your weak link out here, it is just making sure that I'm using all the tools as possible when you call those bottoms or call those tops, to simply stay with the trade unless something gets violated. So something I'm working with and tinkering with. And but in any event, let's get back to the Australian dollar. I would be watching the Australian dollar, the futures contract, and watching for some type of bottom signal. We're not there yet. What's a bottom signal? You've got to see the cavalry rush in. And you most certainly need to see price close above Stevie's red line, except on this chart, it's Stevie's black dots out there. By the way, that's priced at 0.7531 as we speak. So you've got the Australian dollar. Looks like it is trying to form a bottom. Let's go take a look. And we see the breakout level that was tested back on November 15th. When we come back from this break, let's go take a look at our 3 time frame charts for Freeport-McMoRan. Let's go see what they need to do on the daily, on the weekly, on the monthly charts out here in order to give us a confirmed buy signal. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So the first chart that we have on our screen here is the monthly chart for Freeport-McMoRan. And just to show you, this is no hocus pocus, and really the importance of taking a look at and understanding certain correlations that exist in the marketplace, such as the Australian dollar and Freeport-McMoRan. You'll see that Freeport-McMoRan here in January, the month of January 2016, is the actual low that we have here. And if we take a look at the monthly chart here for the Australian dollar, the futures contract, you'll see that also that same correlates to the exact same low in 2016. And if you take a look at this pattern that you have here, which in essence is a series of rising bottoms inside the Australian dollar as we speak right now, and if you then take a look at the pattern here, you've got it in essence side by side inside of Freeport-McMoRan, you can see the pattern that is in place out here. Now, Freeport-McMoRan at this point in time can be considered nothing more than a trade when we take a look at that long-term chart. In order for this to turn out to be something more than a trade, number one, it must clear the top of its TAS market profile, the top of the box, 1628. The other thing that we can take a look at is the last time up here, 625 million shares were going against a downdraft of 629. And that's back to July of 2015. So there are certainly, we can make the case, there are plenty of holders inside of Freeport-McMoRan thought they were buying a bottom back in July of 2015. And at this stage, the trade just hasn't worked out well. They're just happy to get their money back. Last time up, again, was 625 million shares. And that was, by the way, the month of January 2017. And during the year here, August is the highest that we've seen price, and only 445 million shares. So it doesn't exactly have the oomph that you're looking for. So unless this is a super long-term trade and you've got a reason to consider getting into Freeport-McMoRan, and then if you do, then just know that you're not going to get, it doesn't look like at this stage here, a lot of price action. Now, maybe that changes a bit if, in fact, the Australian dollar finds a nice Gartley buy pattern. It's just not there just yet. So I don't know that it's worth the reward. It's at basically 15 to get out a $1.28. The average true range is 40 cents, so you'd have to have a stop of about 75 cents at least. And that's if you got in now. And the reality is your stop needs to be probably below the swing point from November 15th out here of 13.22. The risk reward doesn't make sense. If price is going to get to 16.28, it needs to clear the top of its weekly profile. So far this week, that has been resistance. 15.01, the actual high this week is $15. The trading at 14.89. So I'm thinking maybe there is a better trade for you, unless you are, for some reason, just really looking at a long-term hold inside of Freeport-McMoRan. The other symbol was going to be Morgan Stanley. And if we take a look at Morgan Stanley, Steve-O likes these sets of charts a whole lot better. Now, in the case of Morgan Stanley, what it looks like there may be an opportunity is to get this priced at about 50.57. There was this nice gap to the upside on the trading day of, well, let's get our little data box out here. The data box says it was the day of November 29th, 9.4 million shares. Now, what price has done today, it's at the top of that daily profile, 52.90. It's moved lower. Maybe, just maybe, this pulls back for you into that 50.57 area. If we do take a look at the C point, this is the trading day of October 25th, 9.6 million shares. Yesterday was a cross on a positive basis, decent volume, 8.7 versus 9.6, not too shabby. It's trying to really bust through that area. So maybe this pulls back. Why do we like this chart better? Well, you take a look at this A to B equals CD pattern on a monthly basis out here. Volume, 199 million shares, and that was taken out with 303 million shares. So longer term, the signal in Morgan Stanley is it wants to complete an A to B equals CD pattern. And you might be looking at my screen and saying, hey, hello, Steve-O, hello, it's already completed an A to B equals CD. And you're absolutely right. It completed the one-to-one. But those only occur one-to-one 60% of the time. I can assure you, I can guarantee you, this is not one of those one-to-one A to B equals CD patterns. The next level is 58.63. Is that going to be the end of it? That'd be a nice little Gartley sell. Maybe it is, maybe it isn't. More likely, where price is headed to is back to the swing points out here over time to the highs in 2007. It's not its all-time high, but that is where it's headed to. And that's going to be in the $77 area, maybe down to about $70.32. So I like this trade. I like this setup much better, Art. And even though we've taken a lot of time, hey, why not? Because if we can evaluate a stock this way, well, then we can do this and we can apply all those same tools to everything else that you and I look at. So that was for King Arthur and all of his knights. Now, if we go take a look at another request here from Dano to go take a look at gold and the NASDAQ 100. So let's go take a look at the NASDAQ 100 and let's go set the charts here. To a different set of charts out there. And what we're going to be taking a look at is where's the NDX 100 trading in relationship to Stevie's red line. And what we can see here is price hit it and thus far has rejected it. Now, that is a level of resistance out here. And we can see that in a sense we have higher lows, lower lows, and lower highs out here. So what you really want to see, Dano, whether it's today or whether it's Monday, you really want to see Stevie's red line overtaken by price. And that's 63.75. You're trading at 63.59 as we speak right now. That doesn't mean that you have to sell. That means that you do need to see that get over that level. Now, if we take a look at, and at this stage here, we're going to take a look at a couple of other things to help us identify whether or not that's really a possibility. Well, market breadth-wise, when we take a look at all of the individual equities traded inside the NASDAQ 100, we are going to see that 38 of them are above the top of the box versus 15 that are trading below the bottom. So market breadth wise, even if it's not today, this says that the NDX 100 should continue higher, even though it's run into that natural level of resistance. That's taking a look at market breadth. What else can we take a look at inside the NASDAQ? Well, not so much the NASDAQ 100, but what we can look at is what's going on with regard to the advanced decline information inside the larger NASDAQ composite. And what you and I can see is right now, it is still below zero. The reading on this is minus 13. We really, now that you've hit resistance in the NDX, you want to see the composite give you the opposite signal, because this still tells you and I that inside the composite, and now maybe even inside the NDX 100, this is nothing more than a counter trend move. So closing above that zero line, well, that would be very healthy out here. What else can we take a look at inside of the NASDAQ? Well, we can go take a look at the NQ. So when we come back from this break, let's go take a look at it. And that's only because I can't pop it up on my screen. Oh, here we go. You know, Dano, if the NQ closes above 63.50.40 today, I say stay, because that's above a brand new box. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
50 from. We were going into the breakout here. Here is a, let's do this. This is going to be better to answer that question and maybe our thinking behind what the NQ is doing. So this is the NQ right here showing you 5 different time frames and their sets of market profiles. 30-minute is in the extreme left, 120-minute next to it. Dead center is 240, the 4-hour chart. Next to that is the daily, and then next to that is the weekly. And in the case of the daily chart out here, brand new profile formed earlier this morning. And the top of that box, and so this is going to be an end of the day call for you, Dano. But if in fact we see a close above 63.50.40 out here, and with the positive market breadth we see inside the NASDAQ 100, odds favor that this is breaking out and price is going to make its way back to its highs. It's just as simple as that. And if price can close above its perigee pivot point, all the better. I think that's 63.69, or we can go take a look at that out there. But so, you know, this is closing above that level would be saying, hey, I've got a breakout. Now, the breakout just takes you back to its previous swing point. What it looks like is going to occur Sunday night, Monday morning, is a brand new market profile that's going to form on the weekly chart out here. I don't know where those levels are going to be. I just know that one is in the process of forming, very much like we knew that yesterday there was a new profile that was forming in the daily chart out here. And yes, Maria, she's looking at a small A to B equals CD to 63.30. There's no question, and this all depends on the time frames that we're each looking at out here. If we take a look at the 30-minute time frame chart, we can see that it has one of your favorite patterns, my favorite pattern, because it's used to call every single market top ever since the 1700s inside the Dow. So it's got a few years worth of great results out here, and it works on the intraday time frame. We can see that when the NQ made its bottom back here was at about 6:30 in the morning. Sorry, 7 in the morning. Whoops. Back on the trading day a couple days ago. That was Tuesday, I believe. And we did see a test of that low again when there was a little short-term high that formed at about 1:30 in the morning. What the heck is going on with this chart here? Why isn't it taking it? This is back on December 7th, 1:30 in the morning. We saw a bit of a sell-off, an A to B equals CD to the downside. Nice little Gartley pattern. It looked like this, folks. They always look the same. It's just a matter of waiting for the cavalry to arrive. And in fact, that's really what occurred a couple different times, but at 10 o'clock in the morning, I don't know why it's giving me some trouble out here. This is yesterday morning at about 10 o'clock that gave that nice little bounce. Now you can see that we had the same pattern as identified bottoms has now identified its next potential top with an A to B equals CD down that Maria is looking at. And this confirmed, albeit very small, really didn't confirm until 11 o'clock this morning when you had that little, and I do mean little, bearish engulfing candle. Nonetheless, you had follow through to the downside. And as long as price stays below Stevie's red line in the 63.83 level, then the A to B equals CD to the downside is active. And that would take you to, whoops, sorry. That would take you, I've got the 63.48 and you had 63.30. So, but all that really is on the larger scale at this stage is likely nothing more than setting up another short-term buy point. So one of two things. The NQ sells off and moves lower, and if it does, folks, don't buy into the thought that, oh, that's it, that's a failure, or any of that hogwash out here, because at this stage, the easier or the better call is it's just setting up one of those normal back and forth moves, and it's really just trying to set up its next Gartley buy pattern. Whereas if price clears 63.83 out here, then it's back off to the races on a 30-minute time frame chart. Its price oscillator is above zero. You get above Stevie's red line, there's nothing more bullish than a rising price oscillator above zero. I don't care what time frame it is you're on, but just stay within inside that same time frame to make your trading decisions. With regard to Goldilocks out here, we talked about correlations between Freeport-McMoran and the Australian dollar. Well, remember that chart when we looked at it. I've now reset this up. This is the gold future futures contract, daily chart out there, continuous contract. And at the bottom, it is representing the correlation, positive or negative, with regard to the Japanese yen. Well, you'll see, if we thought there was a correlation between the Aussie dollar and Freeport-McMoRan, well, this one tells you that's nothing compared to the correlation between the yen and gold out here. I mean, it's such a positive bias correlation that to ignore it, well, you and I would never ignore it. Others might ignore it, but we will not. So with regard to gold, which you are short on, Dano, what's going in your favor? Well, one of the things going in your favor is at this stage here, you've got the yen trading lower. Now, it hasn't busted out a swing point, unlike gold. So this still here, you know, has until this swing point from the trading day of, let's go get it, let's go grab it, November 6th gets taken out. We could just be having a retracement. We could just be having an A to B equals CD to the downside. It looks like this inside of the yen, which would also mean it has lower to go, which means it's really going to be a test of the previous swing point, and that is one possibility, getting down to about 0.8752, which is then inside that swing point low from November 6th. So that's where it could theoretically form a bottom. We won't know. We just know what to be looking for, and we know when it will tell us if it's doing that. So at this stage here, this would say, if you're going to base your decision on the yen, go ahead and stick with the short gold trade. But that's not good enough for you and I. We really need to go take a look at gold and see what it's doing to just make sure that that's really the signal coming from gold. And when we take a look at gold, well, what you're going to see is that gold is singing in the key of G. And that's wave number 7 to the downside, and that's all the way from the high where this A to B equals CD pattern starts. That's coming from this trading session of September the 8th. I like September the 8th out here. I even like September the 9th even more. But we didn't have that. That was on a weekend. But you can see a nice gap to the downside that, you know, confirmed another topping pattern out here. And now it looks like gold wants to, what most people would say is gold wants to head to about 12.12, 12.13, the 1 A to B equals CD. I would have to say, Danny, not so fast. You don't have a bullish reversal signal. But you and I know how this market loves to sing in that key of G. The earliest that you have a confirmation of that pattern would come on Monday. You know, as long as gold doesn't trade below today's low, you'd have that out there. If it does continue to trade lower, that doesn't mean this pattern goes away. Just means it gets extended. Maybe it's down towards the 12.12 level. As long as gold is below 12.69.60, that's Stevie's red line, you have a falling price oscillator below zero. So when we come back, we'll do one last thing in taking a look at gold, where I think we need to at least be aware of the correlation, and that's going to be silver. So we'll have one more thing to look at. Just one more thing, Curly. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the last thing we want to take a look at with regard to metals out here, or looking for signals, is really coming from silver, high-ho silver. And as we take a look at the March 2018 contract, we're going to see that it actually has completed the one-to-one. Remember, only 60% of the time does this actually complete at that one-to-one area. We also have that the silver chart from its highs singing in the key of G out here. And today doesn't look like the low is going to be taken out, so it's going to confirm that way. But we don't have any kind of bullish reversal candle. We have price trading below Stevie's red line, 1627. So this says, hey, maybe that seventh wave move, who really gives a darn? This thing's going to head lower. Now, in the case of silver, the next area is going to be the 1512 level. You're at 1582 as we speak right now. So I would say, guys, gals, watch those three things out here. Again, Dano, I don't see any reason to exit your short gold trade out here, but you want to pay attention to those patterns that you and I just looked at, so that you can, continue to manage and monitor that trade for you. So hopefully that helps you. As I take a look at the requests that have come in, let's see here. That's just saying good job. Okay, so I don't have any other requests out here. Guys, gals in the den, if there's something you want me to look at here before the weekend is out, please let me know. Happy to go ahead and take a look at those things. So let's just continue on, kind of just generally going through the markets here and get a feel for the signals. Because we focused on some very specific things. Well, Danny wants to take a look at platinum. So in Atlanta, where it's cold, and it's going to be cold down here in South Florida. Now, it's a different kind of cold, that's for sure. But nonetheless, it's going to be cold. I'm going to have to break out the sweatshirts. I don't even know if I'm going to be able to wear shorts. I'll do my best. If we take a look at platinum, and Danny, you're trading the platinum contract, the January platinum contract? Yes, you are. That's what it looks like. So as we take a look at this, as I recall, you are looking for a bottom. You are looking for a bottom, and I like to find bottoms out here. So I'd be happy to help you. The question is going to be, God, where did I put that chart? So give me a second here to try to find it because this thing is still not looking pretty by any stretch of the imagination. January 2018, let me pull up this contract on my other set of charts just so we can see. This is pulling up monthly. That was a brain contusion there. Wait, let me just change this back to a daily out here. Okay, so when we take a look at this chart, we'll pull it up on our screen out here. We can see that when platinum was topping, it was moving higher, doing less relative energy. On this trading session right here on September 11th was when it gave you the confirmation of the top. Why? Because it was a bearish reversal signal. It was a gap to the downside. It was a close below Stevie's red line. When it did make a short-term bottom, it made the same type of pattern. But now that was just really a bounce. And what you've got out here is an A to B equals CD to the downside. There's no other way to call it other than to say, I got kind of messed up there on the line where it's headed to. But it looks like platinum is going to be a buy, maybe a buy, at around the 837, 840-ish type area. Today's going to be day 7 of the Tom DeMark setup 9 count. That means Sunday, Monday could be number 8. Tuesday could be number 9. You'll pay attention then because at those 9 counts is where you can see reversals. Last time we saw a 9 count out here was really back on the trading day of October 17th. Things kind of started moving just sideways to lower. When the time before that was back on October 4th, you saw a nice little bounce to the upside. So I think you've just got to keep your hands in your pockets when it comes to platinum. Let's go out to Denver and speak with Ron. Ron, thanks for calling. Thanks for holding. How are you this afternoon or this morning? Or is it late morning for you?
Great, Steve. I just want to let you know I just did a small credit spread on the Vita NVDA.
All right.
And what I did is I sold the 190, and this expires a week from today, next Friday. I sold the 190 puts and bought the 187.5 puts. I brought in $84 times 2, so it was only 2 of them. But I just wondered what you think of a income spread like that. It should hopefully expires worthless by the end of next Friday.
So let's take a look at NVIDIA and see where it is likely headed to so that to help you with the math out here. And, we've certainly let's look at this from what's taken place this week inside of NVIDIA. And that's probably the most important thing at this stage. And that is that we've certainly seen and I'm going to start with the daily chart just to back up so we have a frame of reference. And when this was forming its high back on the trading day of November 22nd through the 27th, price was moving higher, doing less relative energy, specifically on November 27th. And that day was a bearish engulfing key reversal candle out here, and price was trading below that oscillator unchanged line, Stevie's red line. So it is no surprise that it was pulling back. The question that you and I have to ask ourselves is, why did it find support where it did on the trading day of December 5th? And the daily chart doesn't answer that for us. What answers that for us is really the weekly chart. And in the weekly chart, it found support at the bottom of its weekly profile. Now, I'm going to turn. Ron, are you able to see my screen while we're talking?
I am.
Okay.
I'm following it.
Okay, so this box that is here right now, this weekly box, number one, it has a bullish structure. We say a bullish structure because the center is closer to the bottom. And this says that buyers are the ones in control of this price area. You really, to see this move lower, you really want to see 189.36 broken. However, at this stage, that has not happened. If buyers have control of this area, they can push it up to 218.67. They can kind of do that in somewhat of a heartbeat out here. Bullish structured box. Bullish box in the way that it is formed above the prior box out here. So even though there was some pretty decent selling inside of NVIDIA, it's found support. There's just simply no other way to look at it. Now, I don't know what the session looks like at the end of the day, at the end of the week. Right now, it's getting close to forming a little hammer candle. But I don't know if it's going to be a hammer candle or not. That would be another bullish sign. If it did, that would then support, well, this thing could move up to 218.67. And if it does that on the math for you, how's that going to help or hurt your trade?
Well, that's good. I want it to move up so they expire worth it. 189.36, I admit I'm wrong and cover.
Okay. The place I've now next be watching for, now that we know what's gone on a weekly basis, is on the daily side. And on the daily side, a brand new profile formed yesterday. And we're trading above the center line, which is 191.61. That's the left-hand panel chart. And this says, hey, even on more counter-trend rally, this should at least get to 202.65. So as that happens, maybe that's where you want to take a look at, your position.
Okay. Thank you, sir. Appreciate it.
Hey, my pleasure. Thanks for calling. Have a great weekend.
Bye.
That was Ron in Denver. Now, we were taking a look at, before that break, I can't recall. I'll tell you what I'll do as we go to this break. I'll try to remember, but even more important, because it's our last 2-minute segment, if there's no other request in there, I'll try to find you the most important piece of information to watch at today's close. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. So the next great piece of information out here, I think maybe better for the better thing is just taking a look at what is, things that are going to be happening as we move into 2018. and beyond. And one of those things is that the Federal Reserve is going to continue to raise interest rates. And on this chart here, this is a chart of the S&P 500, and the red arrows are identifying the four interest rate rises that we have had. Now, the interest rate rise that first took place December 17, 2015, which just happened to coincide with the market moving lower into February of 2016. I don't believe that had anything to do with interest rates. There were other issues, technically speaking, that were going on inside the S&P 500. But if we take a look at the other three rates that we've seen so far, December 14th, 2016, March 15th of this year, and June 14th of this year, we can see that the market has fought it off. It will continue to do that. Doesn't mean there's not going to be some short-term volatility or changes in direction and so forth, but it does not mean that with the Federal Reserve raising rates that it's over, that the bull market is over. Nothing could be further from the truth. If you want to see where the S&P 500 is headed to, let's go take a look at the long-term chart. We'll put out the S&P 500, the actual indice. We'll go ahead and put quarterly time frame out here just to make it easy. And if I were to ask you to draw an A to B equals CD pattern, it should, I don't have the tool out here. Why did that happen? That's okay. We'll get it out here rather quickly. Yeah, we got it. We got about 20 seconds or so. So you would draw a pattern that looks like this. And that pattern is going to start with the March 9th low. That's your A point. Your B point's going to be, it looks like April in 2015. Your C point, January 2016. What is your price projection out there for the S&P 500? 3278. That's its next target. And 3677 cannot be taken off the table. Ho, 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 ho. Everybody have a great weekend. Stay tuned. David White, your favorite polar bear and mine, is up next. After that, Tom O'Brien from 3 to 5. We'll all be back with you on Monday. I'm sure taking a look at those Bitcoin futures and how they're trading. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.